Stock market is a platform where publicly listed companies can issue shares to the public, which can be bought and sold by investors. When you buy a share, you become a part owner of the company and can potentially benefit from its growth and profits through capital appreciation and dividends. The market is regulated by the Securities and Exchange Board of India, which oversees the functioning of stock exchanges and ensures that listed companies comply with regulations. When a company comes out with an initial public offer, IPO, it is called the primary market. The normal purpose of an IPO is to get the stock listed in the share market. Once the share gets listed and bought, it starts trading further in the secondary market. The market determines the price of the share as per the usual rules of demand and supply. Normally, share prices go up when the company is growing very fast, or it is earning very good profits, or it gets new orders. Online trading is all about buying and selling shares on the internet sitting in the comfort of your office or your home. You just need to log into your trading account and you can buy and sell shares. Any person who has a PAN card can buy and sell shares in the market. You just need to open a Demat trading account with a broker. There is no minimum investment required, as you can even buy one share of a company. So if you buy a stock with a market price of 100 rupees and you just buy one share, then you just need to invest 100 rupees. Of course, brokerage and statutory charges will be extra. Statutory charges like GST, stamp duty and STT are imposed by either the central or the state government. The broker does not get these payments. The broker just collects these on your behalf and deposits them with the government. To be able to invest in the share market, you will need to open a Demat trading account with a registered stockbroker.